All right, let's talk about financial charts. We're going to decode their secret language. And I'm not just talking about numbers and lines. We're about to uncover the real stories, the human emotion, the psychology that's hiding right there in plain sight.
So, you ever pull up a stock chart and it just looks like, well, a total mess? Just a jumble of red and green lines, right? It's that classic feeling like you're staring at a foreign language you have no hope of understanding. But here's the thing, what if it's not noise at all? What if every single one of those little shapes is actually a chapter in a much bigger story? You know, a story about struggle, about triumph, about these huge power shifts between buyers and sellers? That's exactly what we're going to do today. We're going to learn to read that story.
Okay, so let's get into the nitty-gritty. Think of every single candlestick on that chart as a snapshot of a battle that happened over a set period of time. It tells you exactly who was fighting, who was winning, and yeah, who totally lost control. And trust me, by the end of this, you're going to know exactly how to read the outcome of that fight. All right, let's dive in. And we're going to start with the simplest story you can find on a chart: a total standstill, a stalemate. You know, that moment of pure, absolute indecision in the market. And that brings us to our first key pattern, the doji. Fun fact, this all comes from 18th century Japanese rice traders. The name itself, doji, it means uncertainty or error, which is just perfect, right? It describes a situation where buyers and sellers go at it, and after this huge, hard-fought battle, nobody wins. It's a draw.
Just picture it. The trading day starts. The sellers, they just hammer the price down. But the buyers, they're not having it. They fight back and push the price all the way up. But then, the sellers push it right back down again. And by the end of the day, the price closes pretty much exactly where it started. Total exhaustion on both sides. Zero ground gain.
And here's the really important part. It doesn't matter if that little tiny body of the doji is red or green. The story is exactly the same. Those long shadows, we call them wicks, they tell you there was a massive fight. But that tiny little body, it screams draw. So if you're a trader and you see a doji pop up after a really strong trend, that's like a huge flashing sign telling you, hey, the momentum here might be running out of gas. It's your cue to really, really pay attention.
Now, this whole uncertainty thing shows up in a few different flavors. You've got your standard doji, which basically looks like a plus sign. Then there's the dragonfly doji, that's where sellers try to take over but just got completely shut down. And the gravestone doji is the mirror image. Buyers made a big push and totally failed. But no matter the shade, the takeaway is always the same: pure uncertainty.
Okay, enough with the ties. Let's talk about a knockout, a decisive, overwhelming victory. What does it look like when one side just completely and totally dominates the market?
Well, that brings us to the marubosu, another great Japanese term. It literally means bald. And that's the perfect description, because it's a candle with no hair, no wicks, no tails, nothing. It is the absolute polar opposite of a doji. This one tells a story of pure, undisputed momentum, zero hesitation, just total conviction from one side. And this story of total control, it comes in two versions. A green marubosu, that means the price opened at the very bottom and just shot straight up, closing at the absolute high. The bulls were in complete control end to end. A red marubosu is the exact same story, just for the bears. It opens at the high and craters to the low. Again, zero hesitation, pure power. Okay, but what about a comeback? I mean, market stories aren't always stalemates or total blowouts, right? Some of the most powerful signals you'll ever see come from a dramatic recovery, a real comeback story inside a single day. So what happens when all that pure momentum we just talked about suddenly hits a brick wall? Well, that brings us to the hammer. And this pattern tells an amazing story of bullish resilience. It shows us that, yeah, sellers tried to take over, but the buyers just weren't having it. They rejected those low prices forcefully and staged an incredible comeback. For a trader, seeing a hammer show up after a long downtrend, that can be a super powerful signal that a bottom might be forming. So, let's break down that battle. The day opens and bam, the sellers take control. They just push the price way, way down. It looks like it's going to be a disaster for the bulls. But then, the buyers see a bargain. They jump in, soak up all that selling pressure, and manage to drive the price all the way back up to close near the high. It's a classic case of snatching victory from the jaws of defeat. What looked like a loss turns into a super powerful finish. And just like the doji, here's another key point. The hammer is color independent.
So even if the candle closes just a little bit lower than it opened, making it technically red, it's the story that matters. And the story here is that massive rejection of lower prices. You see it in that long lower tail. That comeback, that's a bullish signal no matter what color the candle ends up being. All right, so we've covered stories that happen in one candle. Now let's zoom out a bit and look at patterns that take two candles to tell their tale. These two-day stories can often signal a really big shift, like a potential reversal of the whole trend. You know, the source material we're using here has this fantastic analogy for understanding a couple of key reversal patterns. I want you to think of it like a car race. When you see one car overtake another, what does that tell you about the power dynamic between them? Okay, first up is the bullish engulfing pattern. In our race analogy, this is like one car just flooring it and completely swallowing up the car in front. The second green candle is so big and powerful, it just totally engulfs the previous red one. It's an aggressive, decisive takeover. Then you've got the piercing pattern. This one's a little different. It's like a car that starts behind but shows some serious muscle by making up more than half the distance. So the second green candle actually opens lower than the red one, but it rallies hard and closes above the halfway point of that red candle. It's still a strong signal that buyers are back in the game, just maybe a little more conservative.
Let's look at a real-world example here. See this chart? You've got a clear downtrend, and that red candle suggests the selling is going to continue. But look what happens the next day. The green candle opens even lower. For a second, it looks like total panic selling. But then the buyers step in with force. They drive the price all the way back up, closing well above the halfway mark of that last red candle. That is the pierce, and it's a huge clue that the momentum might be shifting.
Okay, so we've covered a lot. We've seen standstills, total domination, epic comebacks, and huge power shifts. So what's the big takeaway here? How do we take all these little individual stories and put them together to see the bigger picture? It really comes down to a few key principles. First, always remember, these aren't just shapes on a screen. They're stories about human emotion, about fear and greed. Second, and this is absolutely critical, these are signals of potential. They are not crystal balls telling you the future. The pros use them as clues, and they always look for other signs to confirm what they're seeing. Third, context is king. A hammer pattern after a huge downtrend means way more than one that just shows up in the middle of a choppy market. And finally, you gotta understand that different patterns have different personalities, right? Some are super aggressive, like the engulfing pattern, while others are more conservative, like the piercing pattern. So once you start looking for these fundamental stories, these little battles between buyers and sellers, you can really start to read the narrative that's hidden in any chart. It's not just random noise anymore. It becomes this living, breathing history of market psychology. So now that you know the language, the only real question left is, what stories are you going to find?